Hi, I'm Steve Carver, and so glad to welcome you to our session tonight. We're going to be basically talking about enhancing our basic business skills, focusing on bookkeeping, forecasting, and negotiating as the main topics. And then we'll tie in all the other things that we bring together during the series. So glad to have all of you with us tonight. My name is Steve Carver. I'm speaking with you from my home office studio in Dunn, North Carolina, presentation number 1114. So thank you for joining me on my journey and let me ride along with you on yours. Let me mention to you that I'm not a lawyer or an accountant, just a fellow that's been in business for 64 years and still in business every day, working with customers, and I sell farm equipment on the internet to folks all over the United States. And then if they buy an implement from me, then hopefully they will come back and buy some parts from me as well. So that's how we keep our little business going on, and have done it for a long time, and have a wonderful customer base that we stay in touch with, and they stay in touch with us. But the first advice I'll always give you in getting your business started and going on to uncharted territories is ask questions. Go to someone before you make a serious decision. Get a second or even a third opinion. And you can't find a better place to get good business advice than your small business centers at your local community college. And sponsoring with us tonight is the director of the center there at NAF Community College. Ruthie is with us tonight, so y'all all can say hello to her or give her a wave. Ask any questions that you might have at any time, as long as she's able to stay with us. So thank you, Ruthie, for being with us. And anyone who wants to give her a call and make an appointment, here's her phone number, 252-451-8344, or drop her an email. She's a great counselor, and if she don't know the answers, she's got a wonderful network of people who will, and certainly be willing to help you. As she just mentioned, please fill out your survey that'll come to you either tonight or sometime tomorrow. Let her know what courses that you'd like, what you thought of our session tonight, and it's a good way to communicate right straight with her or set up additional information. So don't hesitate to do that as you go. Excuse the phone number. It's my busy season, so I need to take all the messages that I can while we're giving lessons tonight. Ruth has already sent to you, if you were pre-registered, study guides for tonight's session, which are just full of good information. And tomorrow I'll resend them to you in case you haven't registered, so make sure that you get them. And we'll talk about a lot of stuff that, tonight that's included in them, plus some extras. Now, just before we went online, I sent to you the quiz for this Academy series that you'll need to complete the quiz, fill in the answers, and send it back to me. And make sure that when you do, you give me your name and address, how you'd like the certificates filled out and mailed to. So you got two emails. One is the questions, and the other is the answers. So I know you're going to make 100 on them, but I'm going to require that you send that completed quiz back to us, so that we'll make sure that you got a good understanding of what we did through the Academy series, and that will qualify you for a completion of the course to get a certificate for that. Now, next week is a required class. You need to attend next week to qualify for your course completion, because we're going to wrap it up and tie it all together and be talking about taxes and deductions and depreciation, record keeping, and then a little bonus there on the secrets, secrets to help you close sales. So make sure you plan to attend next week as well, Tuesday night at 6:30. Then just looking down the future, because next week we'll wrap up this particular course. Then the following week on April the 9th, we'll do the tax presentation again in the afternoon at 2 p.m. And then on April the 10th, we'll start a 7-part Wednesday night course, which you all will be welcome to attend that as well. Those classes will be very, very similar to what we've done this time. So maybe if you missed something or didn't quite understand or can't quite figure out how to apply it, attending a second or even a third time sometimes helps you put these things to work. And putting the work is so important. You can have all the knowledge that you want, attend all the classes that you need to, but if you don't take these ingredients in the recipe and get them just right and make them just right, they just won't help you apply them in your business. And that's why I always say to you, you're welcome to attend and take in what you can, but if you're ready to really start applying this and moving forward, then that's going the extra mile, and we'll certainly work with you as hard as we can to help you in any way we can. And we are so blessed this session to have several folks that are applying these skills and strategies and really seeing their business move forward. Folks that have been in business for a while are applying new strategies and are seeing new activities in their business. And man, that's the most gratifying thing that I can do, and I know for Ruthie as well. I keep up with who attends, and so we know how many times you've attended and if you can qualify for your certificate. So y'all keep coming on board. Several of you are in a position to qualify for graduation this time, so congratulations on that. Let's say hello and highlight some folks that are going the extra mile. Sarita Sampson's over in Clinton. She is the lady who does our certificates for us and does a great job. And she is our master associate, having attended 7 different series in the past. Sherwanky Mitchell is with us tonight, and so appreciative of all the work she does. If you're not following her on social media, on Facebook, and at her website, Crafting Chaos, and you have an interest in selling artwork and merchandising, she is becoming a real pro at it, and I learn things from her every day. So thank you for attending and sharing your knowledge with us, Frankie, and I appreciate the fact that you're applying some things that we're teaching as well. She is first in class for our spring session that we just finished, so congratulations for that as well. Lanana Morgan in Tarboro has been a regular attender. She's thinking about getting the business started. We don't know what she's up to for sure, but she'll let us know when she's ready. And Johanna Martin is in Parkton in the Federal and Hope Mills, Lumberton area. Amazing work that she's doing with her crafting work, mainly making wreaths, and does a great job with her logo, putting up good information. So on social media, her call sign there is Meshed Up Deco Decor. Meshed Up Deco Decor. So check her out on social media. She's doing a wonderful job using videos and doing lots and lots of photographs as well. Her website has got a really great question and answer feature to it that I'd like to see all of us include in our websites if we can, and she's really on top of it, and so I congratulate her for that as well. She has listed out her profit centers, does a lot of different things, applying her skills in different ways to make money with different customer groups, which is what we teach, of course, so congratulations for doing that, Johanna. She does have a display set up where you can buy her products at 2 different places. Has them set up in galleries in Hope Mills and also at Lumberton, North Carolina. So this young lady is very active in her business, and so happy for her. She's communicating, she told me this past week that she's communicating with another one of our associate members who is in charge of the White Lake Water Festival coming up in May. She's the one that books the booths and all, and Johanna's going to be talking with her about maybe setting up a booth and do some selling down at White Lake in May. Glad to see all you associates working together. That is so very special. So find Johanna on Facebook and see how it's done. Dusa Maria has been with us on a regular basis. She just qualified for a certificate for last session. So glad to have you with us and looking forward to seeing you settle down and focus on a particular business when you're ready to, and we'll help you all we can. So thanks for joining us on a regular basis from New York. This past week, we had the special honored to have Maya Spivey from Rocky Mountain to join us last week. I hope she can be back with us tonight, and shared with us information about her work in the rippleeffects.com, an amazing community development type of organization. She is working with a for-profit organization, but she supplies candles and other materials to nonprofits so that they can make money. And she's done a great job on the internet presenting her information. She's involved in making the products herself right there in Rocky Mount. I'm really looking forward maybe to visiting one day and see how all this works and get a good feel so that we can help her even further. But this is a worldwide effort to help people all over the world. So it's got a great, great potential, and she's right in the middle of it, excited about it. I think that her mother and father actually started the organization, and now she's into it as well, pushing real hard. She, even before attending our classes, got her mission statements, giving good information about what you're doing. And that is so important when you're presenting your business on the internet, to give people a chance to get to know you and tell them why you're here and why they should be interested in you. But her main product right now, as I read it, is making candles of 100 and maybe more than 100 different types, and present them at 2 or 3 different websites all around. Does a good job with her marketing. We all can take some lessons from her imaging. That is really important for us to try to do it. Week before last, we talked about how important it is to be focused on the different seasons, because especially here in North Carolina, where we have 4 full seasons, that usually means 4 different customer groups that we can be tied into. So whatever you're doing, think about, are you plugged into your seasonal opportunities in your business? So thank you so much, Maya, for sharing all the information with us, and we certainly look forward to working with you. And we all got to give a big hand to Darcy Garcia. She may not be able to be with us tonight, but let me tell you, she has been on the social media and internet marketing this week. She opened her business last week for the first time. We're so proud of her. She's been coming to our webinars for almost a year now, and finally decided to go live and online. So congratulations, Darcy, in business to be there. And she is approaching the florist business. She's going to be a florist, and her trade name is the Florist of Raleigh, and really putting some good information out to create good business with a brand new website that she has done herself. And I think that she may be available to help the rest of us when we're trying to get a website started. She kind of hinted that she would be willing to help other people as well, so we'll take advantage of that. She's doing teaching. She's holding classes to teach adults and children different crafts related to flower arrangements and such as that. So hopefully that's going to be a good profit center for her there in Raleigh. And she's got 2 or 3 different sessions lined up, so watch out for her social media posts. And if you're interested in that, certainly sign up and give her a visit. She'll be holding her classes over in North Raleigh at the Cornerstone Clubhouse. That's the clubhouse in the Cornerstone subdivision over there. So proud of you guys that are really pushing your business forward. I do want to say to you that you can do all you can with your website. You can do all you can with your images and with social media, but the key way to get people to find your web pages is to send them an email that has the links back to the pages. So email marketing, promoting your products and your different web pages kind of puts it all together. Having a good database that you're sending emails out and linking them back to your web pages is like putting gasoline in a race car. No gas, it don't go anywhere. Great website, but if you're not sending the customers to it, you're not going to go anywhere. So this is really important. Another factor here to make your website go and people find it are videos. The most important things that you can do right now is get you a database started to bring customers to your website, and have a lot of videos on your different web pages, because people will find those videos before they find a regular web page. So let's get started. This is kind of the last, or last week was the last week of talking Chamber of Commerce, promoting, advertising, really pushing you hard to get your products and your profit centers out working. Hopefully I've got you up at the top of the hill, and now with a little push, you'll be coasting down, and ball's in your court now to get your Facebooks and your personal photos and your videos and your business on Google accounts. Ball's in your court to make that happen. Send me any way I can help you. Let me know. Ruthie would be glad to help you as well. So get your business on started. And then now we're going to focus, starting tonight, we're going to be focusing, looking more at skills for the long-term sustainability of your business. So let's think about the important words that we've been doing each week. Remember, we've been doing important words each week, and we've had 4 weeks up before tonight. Do y'all remember what those words are? If any of you'd like to, just type them in chat. All of you remember the first week started with S, second week with M, third week with A, and the fourth week with E. What were those words? Anyone want to type any in? That's why the chat button's important in the webinars, and even more so next week. We'll be doing quite a bit of it tonight. Okay, your words of the week so far. First week was shrewd. We need to become more shrewd, more savvy in what we're doing. Don't settle for the low bar. Let's set our bar up much, much higher to be shrewd and clever and be on top of our game with lots of mindfulness. That is being constant awareness, especially when you're talking and working with your customers. Be aware of what they're saying, and as we'll learn tonight, maybe reading between the lines, taking advantage of nonverbal communications are very important. Third week, we talked about being assertive. Maybe you had never thought about yourself as being assertive. I don't say to you as your business coach, we need to be assertive from time to time to encourage people to go ahead and do business with you, to encourage folks to let's make the move. Sometimes we have to be assertive about ourselves to set the right priorities. So don't be afraid of the word assertive, because let me tell you, no one is motivated until someone is assertive. No one is motivated until someone is assertive. And last week we added the word endurance. So important for entrepreneurs. It's been so important for me. We need to find the intestinal fortitude and wherewithal to stay in the game. And in slow times, it's hard to stay excited and stay active in your business. In slow times or hard times, or after you get knocked down, maybe you didn't get the deals that you wanted. We have to find our way to stay in the game and know that by doing that, we will be stronger in the long run. And we'll talk about different ways that how to have more endurance. We did that earlier in the session. So tonight we're going to add a new word, starts with the letter R, and that word is resilience. Let me tell you, resilience, you can have that endurance, but it goes right along with resilience to be able to bounce back. And bounce back is the key there, in that we can't stay down long. Someone tells us no, we have to just take it and move on and bounce right back up and try to make the next sale, put the next marketing strategy out there, and just keep on being very, very resilient. Holding on to that word and making it a part of your attitude helps you hang on to a more positive attitude, because I can tell you, it is habit forming. Being resilient is habit forming, so let's try to hang in there. Next week we'll have a final word for this session as well. And all of these will be a part of your quiz as you're looking at those, as a matter of fact. So my job is to be assertive and to motivate you to the next step that you want to go to. But remember now, I just want you, everything needs to be at your pace, what you're comfortable with. I can motivate you maybe to pep up the pace a little bit, but you don't want to get to a point that you're just feeling like you're overwhelmed. And sometimes that can happen. But my job is to help you find that pace where you feel comfortable at and keep moving forward. Your job, find the endurance. My job is to keep motivating, and we all will stay in this game, and what a great game it is. So staying power is so very important. And in our last, a few weeks ago, I told a story that Ronald Reagan had told in one of his speeches that I think kind of applies to us and where we are right now in this series Ronald Reagan was telling the story about a real estate agent who was going way out in the country in California to see one of his clients. And he was riding down the road, and he looked over to the side, and there was a chicken running on the road right beside of him, right along. And he sped up a little bit, and that chicken sped right up too, going as fast as the car was. And in just a second, the chicken just took off running. I mean, just running as fast as he could, and left the car and turned into a farmhouse down the road a bit. Well, the fellow looked at it and he said, "You know, that chicken had 3 legs." So he pulled in, followed it in, and there was a farmer out in the front yard, and pulled up to him and introduced himself. And he asked the farmer, did you see a 3-legged chicken run by here?" And the farmer said, "Yes, sir. Yeah, I saw him. We raise them here." And the fellow said, "Well, tell me about that." He said, "Well, I love drumsticks. And my wife likes drumsticks too. And Junior and Sis, they like drumsticks. So we just decided to start growing chickens that had 3 legs so we would have more drumsticks." The fellow said, "Really?" He said, "Yep." He said, "Well, how do they taste?" And the farmer said, "I don't know. We haven't been able to catch one." Well, I know that's kind of corny, but you know what? There's a lot to that, because what we want to do is we want to grow our businesses in such a way that we will be able to take advantage of it, and to make sure that we're keeping all the dots connected. We want to add profit centers that make sense, that we can help our customers catch, and that we can enjoy the fruits of that. So keep that in mind. If you want to grow 3-legged chickens, you got to remember, if you got to catch them before you can enjoy those drumsticks. What's that all about? To stay in business, it's really important if you can have things that you're offering your customers that they want, but it's really important too that you have things that they need, because people will buy things they want when business is good, when the economy is good, when they have extra money in their pocket. But people will buy things they need all the time. Good times and bad times. If you need something, you're going to go buy it, and you'll let the things that you want go by. So as you're planning your business, and several of you mentioned that you're thinking about getting into business, a good mixture, a diversity of things that people want and things that people need will help you be more sustainable. I'm fortunate and blessed to be able to tell you that I'm in the implement business, the tools that go behind tractors like tillers and mowers and things like that. Well, a lot of times people just would just like to have a tiller, they want it. Or they'd like to have a new mower, they want it. But after they buy these products, and then there's a time that they will need new blades for the tillers and the mowers. So therefore, you get a continuous flow of business lasting year after year after year if you always try to diversify your products that you're selling with things that people want and things that people need. You won't be able to make quite as much money on things that people need. The profit margins there are usually not as high, because the competition is going to be stronger with them. But on things that people want, generally you're able to make a higher percentage of profit margins because they're bought on the impulse, and impulse buyers tend not to do as much shopping. So that good mixture, again, can go a long way to helping your business be stronger. So through the course of the series here, we've talked about 40 drill skills, things that are important, and one of your handouts goes through this with videos that you can spend some time on. And if you want to earn extra credits for the Extra Mile Award, take the 40 drill skills handout, and on each one of them, just add in on the word file, in your words, how you will apply each one of these skills to your business. A lot of people do this, and they certainly get a lot of benefits from it as you go along. Number 33, we've already done 32 of them. Number 33, here's a word to the wise. When you have a chance to see or meet a customer or someone that's important to your business, leap up. Just don't act like that it's melancholy, hey, it's kind of nice that you walk by the table. You actually need to stand up and go meet them and stick a hand out and be excited about meeting people that are important to you and important to your business. Now, the same thing applies for people that you love or that you want to impress. but I'm focusing on business tonight. It is not good for you to sit at a table and let one of your customers walk by and you just throw the hand up out. That's everyday nonchalant, let it roll on down the river. But if one of your customers is walking by, or somebody that you want to be a customer that you think a lot of, or you would like to improve your relationship with, get up, be excited, smile, and stick a hand out there and welcome them. This is old-time Southern what you're supposed to do, okay? It's hospitality. Sitting down when someone important is coming to your table and you don't stand up to greet them and make them feel welcome and important is a bad thing, especially with ladies. So keep that in mind as you're going forward, okay? Leap to take advantage and acknowledge a new customer every time. You want to, number 34, keep your radar tuned in. Remember that word mindfulness and shrewdness? This is all about being aware of what's going on around you. What is the next hot thing that's coming along that you might be able to sell, or a new trade you might be able to introduce, or a new service you might be able to provide? Always be looking to the future, the next hot thing. We see people surfing in the ocean. The surfer has to get up and on top of the wave to ride it in and go a long way. To enjoy riding in a hot new product or a good service, you need to get on it early so you can be on the crest and ride it in. Otherwise, if you're just going to sit back and ride with the waves up and down, you'll get hardly any benefit at all from something new that's coming in and through the market. Now, you got to be careful here, and you got to be wise and get some good advice before you jump on a wave like that. But still, we have to be aware. Keep your radar tuned in for what's the best way to go. Okay, you're getting ready to start in the business world, and you're going to be making some pretty tough decisions. And Murphy, that old Murphy's going to throw you some curveballs. There's pitfalls out here. Plenty of unpleasant surprises are down the road, and unexpected expenses as well. What's the best way that we can avoid those? We talked about this in week 1 and week 2, talking about having a good business plan. But tonight we're going to talk about it more seriously, because the best way for you to avoid these pitfalls is for you to have a structured and an informed forecasting way of doing business. In other words, you're always going to be thinking about forecasting. What are the risks that are coming your way? Be aware of that. Be awake and be aware of that. And we'll talk about forecasting a little later on. Also, every deal, there's a negotiation in it. Whether you're negotiating with your child that's 2 years old about is it bedtime or not, or whether or not you're negotiating a $1 million deal in business. What is the single factor that will help you become a very successful negotiator that most people don't realize until it's too late? It is extreme preparation. Preparing your negotiation in advance will make the difference oftentimes as to whether or not you succeed or not. We'll dive into this very deep as well. Just from the humanistic point of view, and working with employees and with customers and with vendors and with our friends and neighbors and people you care about, people do not really care about how much you know, how smart you are. And you may have heard this 100 times before. People do not care about how much you know until they know how much you care. Folks just aren't turned on with people who know it all or talk over you, don't have any interest in what you have to say or what's happening in your life. But it's a kind of give and take. When you care about other people, they'll care about you. And it's an open book. So just kind of dwell on this and remember, put it in the back of your mind when you're making decisions about how to approach a situation. Remember that people don't care how much you know. First, you need to show them that you care. Okay? Number 38. As employers, why should we think our employees should really care about whether or not we're successful or not in our business? Why should we think that people should really want us to succeed and see our business and our dreams come true if we don't care about them and show them that we do? I've learned through the years that when I'm working with my employees and caring about what their goals are, they really get on board and care about what my business goals are and help us get there. And then we work as a family or as a team. And that is, again, the key ingredient is finding out what your employees are trying to achieve and help them do it as their employer, and you will have employees that will stay with you a long, long time. This is a good time in the world to talk about integrity. And I want to tell you, as an old fella here that's been around a while, integrity cannot be compromised or replaced. There's no substitute for it. You either got it or you don't. And I can say to you, young folks that are here listening to me, and I'm not preaching at you, but I'm sharing with you, that your customers and your vendors and people you do business with will recognize first, are you a person of integrity? If you have stand by your principles. And no matter how much charisma you got, no matter how much flamboyancy you got, or how much attention you bring your way, is not a substitute for character. Yeah, as business people and marketing folks and advertising, we need that charisma, but it needs to be genuine. It don't need to be fake, and it needs to be aimed in a way that's letting people see that you care about them and you're trying to have a successful business and run it with integrity. Make that one of your main goals as you're writing your vision plans and your mission statements. Put a little thought to this and put it in there, and then try to live by it. And things will just go better for you. I promise you that. Number 40, and we'll close it out at this. Maybe now you're working for someone else and thinking about starting your own business, or maybe you have worked for someone else, or as you're getting your business started, people will be working for you. I want to remind you a little something here that through the years has just become very clear to me. I've hired and have more than 2,000 employees through the years, and I have learned that people very seldom will quit a job. If the job's decent and you care about them, you're making ends meet with some promise for the future, people will generally stay with you a long time. But people may not quit their job, but they will quit their boss in a hurry. And the person that quits a boss is because he just don't feel like he's appreciated. Feels like he's being stepped on or climbed on, or someone's using him as a ladder to get up some other way. So a boss is someone that is a taskmaster. We don't want to be that. We want to be leaders. We want to lead our employees and lead our customers in the right direction, because, you know, the only thing that a leader needs is a follower. And we need to care about our followers and go from there. And remember, as you're hiring managers, as I have through the years, lots of managers, then sometimes a manager that is not in focus will cause employees to quit and leave. And you, as the owner of the business, will be the one that suffers from it mostly. So just keep this in mind. It's a good rule of thumb to go through the years with. So that's our 40 drill skills. I hope you've enjoyed them. I hope you'll read them. I hope you'll use them and they help them help you. Okay? So now it's time to get in the game, guys. We've gone through the marketing tools, how to find the customers. It's up to you to put all these things to work. Do you have your business cards out? Have you done your videos? Have you sent some pictures of your products and where you're going? I hadn't seen many mission, vision, and promise statements come from you, and they are really good and will help you out a lot. I've sent you emails to how to do them and handouts as to how to do them. Get your Facebook post up and web pages up and running and help your business start growing. Testimonial statements are really, really important. So I'd appreciate seeing some testimonials from y'all so we can tell Ruthie how much we appreciate her sponsoring these classes. You learn how to write testimonials, and you can teach other people how to write testimonials for you. Moving into our main course of subject tonight, let me get a little tea here. I'll stop just a minute. Does anyone have any questions about what we just talked about? If you like, you can just flip on your mic and let me know. All right, if you have anything else, write them in chat, ask your questions, and at the end of the presentation, we'll look over that and or I'll print it out and answer your questions by email tonight or tomorrow. Let's talk about some basic foundations that are absolutely critical for new business owners. Understanding bookkeeping and the importance of it to you as the manager, as the owner. Understanding what forecasting can do for you, and knowing that negotiating is something that we have to do all the time. Now, negotiation is a really deep subject. It's taught all over the world in college classes everywhere. And in your handouts, I've given you several important things to read and to look at, and I hope that you'll do that. We're not going to go through all of that tonight, just time won't allow it. So we're going to be hitting the high spots. And then in other presentations down the road, hopefully you'll be able to attend some forecasting and negotiating classes as singles that dive deep into that as well. So bookkeeping, good subject. As a business person, we need to know monthly, at least monthly or weekly, just how we're coming along. Are we making the right decisions? Is our cash flow good or bad? How are things looking? Our asset management? What's going on? Well, you're out here selling and you're working with employees and marketing and doing all this. Well, someone needs to be looking after the books. Now, indeed, you may do it yourself, and I salute you if you can, but I will tell you this. As your business grows, you will not have time to do the bookkeeping and the selling. It's just really hard to do. In my business, it takes up as much time as I have just to send my bookkeeper the information about what I have sold. So that's important too. Maybe we can do all that by computer at some point in time, but not yet. Bookkeeping is an accounting role, but that doesn't mean that a bookkeeper is an accountant or vice versa. They can be. Sometimes people can serve both roles. As a matter of fact, in my business right now, my bookkeeper is my accountant at this point in time. But an accountant's role is to look at the long term, look over what the bookkeeper is doing, look at those monthly totals, but mainly your accountant is interested in the annual statements of your business. The tax returns and how are the stockholders doing as far as what's going on with them. What is the long-term status of the business compared to years past? What are the challenges facing the business? An accountant and or a CPA, and all accountants are not CPAs, they are trained to give you that kind of information. However, the bookkeeper is telling you what's happening right now. The accountant is going to tell you what's already happened, but the bookkeeper is in the way to look at what's happening right now on a daily basis. The bookkeeper will look at your financial transactions as they're going, keep up with your debits and credits. Sometimes your bookkeeper actually produces the invoices. They maintain your ledgers as to the different chart of accounts, and also sometimes your bookkeeper does your payroll services. I will mention that a lot of companies now are just dealing with contractors that are doing the payroll services. But let's see what the 8 steps for every bookkeeping function is so important. And if you understand this, it will help you understand bookkeeping in general. The accounting cycle has eight steps to it, and it's in a circle. So, and the bookkeeper's job, I like to say to bookkeepers that you got a pretty easy job. You start out with a 0 at the beginning of the day, and at the end of the day, you end up with a 0. You're home free. That's all there is to it. But to get through that process, let's look at this circle right here. The bookkeeper is going to go through taking each and every invoice or check that you write and posting it into the books of your business. Posting it into the books of the business. And at the end of the day, they will make sure that the posting all adds up to the amount of money that's in the drawer, or all the checks that were written, total those up and see what that checkbook balance looks like, and make sure the numbers are right. the bookkeeper makes sure that the daily numbers are right, and we'll talk about how that process works, okay? What are the tools that a bookkeeper uses? What are the tools that QuickBooks uses or any other bookkeeping system? The tools that are used in bookkeeping are called the charts of accounts. A chart of accounts. Accounts that are numbered and describe the different functions of the business, different ways that you spend money, different ways that you bring money in. And we will assign a different number to each account. Generally, just in simplistic ways, we'll say that all the accounts that are bringing money in or represent assets, we'll call those the 100 series. We'll list them down for cash coming in, for goodwill payments that people make to you, office supplies, things that you are buying or things that you are creating assets with, money coming in from invoices and such as that you're selling. And then there's money going out. This is all the checks that you write. And those are your liabilities. And generally, a bookkeeping system will call those the 200 numbers, 201, 202, whatever, okay? And then other items may be given other numbers, and there are things that the officers are interested in, such as the owner's withdrawals or equity or stock shares, retained earnings. There can be some other lines, but the two main ones that you're concerned about right now are money coming in, money going out. Now remember when we were doing the business plan, money coming in, we always said that in black ink with our budget in and such as that. That's money coming in, positive cash flow. Money going out, our liabilities, we usually do those in red ink. That is a debits, money going out. No matter how big or small your business is or what your business is, these truths will remain there. Now, the bookkeeper will look at the invoices or the checks that are written and apply them in their journals. The journals either on the computer screen or large pieces of paper with line numbers going through it. There's a recording there of what is what and how is it being used. Every business will have a different type of journal and different types of books and different account numbers, but they don't have the similarity of they're recording everything that's going in and out. On the screen here is a sales journal from, it looks like a building supply company, and they set it up their way. What we're going to remember is that you're starting to do business, and when you're ready to collect money from someone, you need to create an invoice. An invoice is the way you're going to tell the customer they owe you money or show them how much money they owe you. And generally, you're going to put a number on every invoice and a date on every invoice, and you're going to keep up with it. It is one of those types of records that you're going to need to keep, is copies of your invoices. You may have them in your computer system, or you may have them by paper. I do both. So your number system is important for your invoices because you want to always be able to go back in your record keeping. A customer wants to see something from a certain date, or they have an invoice number, don't know when it was generated because it was written on a check. You want to be able to go back and find this information for you and for your customers as they come along. And I will assure you that when you're in business, you're going to learn that it is amazing how often you have to go back and look at old invoices. So most of the time, invoices will be, well, you want them all the time to be in numerical order. And sometimes that numerical order can be the date that they're written. So here's a sample invoice up here that I've put together just for conversation purposes tonight. And notice that I numbered the invoice 12/12/16. Well, indeed, that could be there's been 121,216 invoices, and the one before that was 215. Or it could be that on December 12th, 2016, this was the first invoice of the day. The second invoice might be -2, -3. So ever how you set it up, and that's up to you to do it, to number your invoices just like you number your checks, is indeed to keep up with them numerically and chronologically. That way you'll be able to go back and find your records. So let's kind of look at this pretend invoice that we're going to say that Ruthie did this. Ruthie's opened up a gift shop, and she's going to be selling candles. She is indeed selling lots of candles, and so this is one of her boxes of candles got sold. So this box of candle on invoice number 121216 bought in $8.56. It was actually an $8 box of candles, and the tax was 56 cents on it. So the bookkeeper now has this invoice on their desk, and they're getting ready to break it out to see what the invoice means to the business cash flow, such as that. So they will look at this, and they would have on different charts of accounts for each one of these lines I've got listed here. So the first thing that goes in is the actual sale was $8 because that tax money is not yours. You'll always need to immediately put the tax money aside and hold on to that money in a pigeonhole place until it's time for you to send it off. You do not get to keep tax money. You do not get to spend tax money. If you do either one of them, you're going to get in trouble. So after we get our tax out of the way, we're going to see that the sale was for $8. And Ruthie paid $2. That was her actual cost for that box of candles, $2. She paid 55 cents freight, and she's going to list each one of those into her bookkeeping system to tell how much her freight cost was and her inventory cost. She's paying a 10% commission to clerks. So the clerk that sold that's going to get 10% of $8 or 80 cents. Not 10% of $8.56. Not the tax. You don't pay commissions on tax money. She's also got a customer loyalty plan where she'll be giving 5% off to her loyal customers from time to time. So out of that box of candy, she's going to set aside 40 cents to apply towards the next box she sells. And she's keeping up with how much marketing money she's spending advertising these particular candles. And she decided to spend 6.5% marketing these candles. So as the money comes in, she's setting aside 52 cents to get her money back. This is how you can track if you're getting a return on your investment in marketing by doing this. And if you're using the look and hook method, you'll be able to do this. So Ruthie's cost of sales here on this box of candles was $4.27, or 53% of the total. Okay, we got it all broken down there. So remember back in week 2 when we're doing our budgeting, and we looked at each different model to determine how much income each one of them would be bringing to us. Indeed, bookkeeping is going to help you do those models right very precisely to know what you can do. So we know right now that on that box of candles, that 47% of it was gross margin, not profit, but gross margin. And 53% was basically our cost of doing business on that particular sale, or cost of selling that product, not cost of doing business. So we made $3.73 margin on that box of candles. So here right away, by doing this, the bookkeeper could tell you, if you asked her, a lot of things from here. But for an example, Miss Bookkeeper, how many boxes of candles, if I sell 100 boxes of candles, how much money will we end up with? And you can look at this chart right away and say, we'll end up with $37.30. Is that right? We end up with $373 if you sell 100 boxes of candles. So this type of bookkeeping system, working with your budgeting and your models, can instantaneously tell you which of your models are making you money and which are not, or what kind of volume do you need to sell to end up with the amount of money you need to have a good business plan. Forecasting is tying in right here, because if we're going to get in the candle business, Ruthie had to make a decision, and she wanted to make X amount of money to bring in an investment on that much floor space. How many does she need to order in order to make the money, and then set up the pricing so that she can make it happen? So the bookkeeper can tell you all that, and they will do that if you ask. So back to the round chart. She took each one of those items that we broke out and she entered them in the journal. That's entering. And once she gets them all done, she's done her posting. And then she will add up all the little numbers to see if they add up to the big number. That's your trial balance. and work out a worksheet to make sure that if you had needed to make any notes or adjustments, you could. But now there was a problem. Instead of charging 56 cents, someone charged 42 cents, and we came up 14 cents short on the tax. Well, just because we didn't collect enough tax money doesn't mean we don't have to pay the correct amount. So yes, you pay the amount of taxes that you should have collected, and then it's up to you to find a way to regenerate that money or get the customers to pay you. But that has to be recorded. And when you start recording or changing the numbers to end up with a balance, a financial statement at the end of the day, that is an adjusting journal entry. And the bookkeepers do that. They have to do that because there's always a little error here and there. But every time you make an adjustment, you put that entry into your system, either in writing on your journal or you make a note in your bookkeeping system. And that adjusting journal entry is the bookkeeper's get out of jail free card in case something ever comes up. You know, we're reading the paper all the time about bookkeepers being suspected of tampering with the books or embezzlement or those kind of things. Well, if they've got their adjusting journal entries listed down, showing why they had to make adjustments in the books, generally they're protected, of course, if they were honest. But that is so important. And your bookkeeper needs to keep up with those entries on their own. Whether or not you care about your employer or this or that, a bookkeeper needs to keep up with their records from this standpoint at the whole time they're employed somewhere and when they leave, because you don't ever know when someone might want to question you about what was happening with the books. So at the end of the day, as we're balancing out, the financial statement is the financial statement for each day, and they would book, and then you close the books. So closing the books ends today. So we started out, let's say we started out up at the top with zero, money coming in. We're going to talk about the income side now. Zero money coming in. We go through all the process around to the top of closing the books. And we have a number there, which is the amount of money that we increased with that day's business. Let's say it's $1,500. Right there at $1,500, and just above that, we'll show a bank deposit for $1,500, takes that away back to zero. So we started with a zero, and we end up with a zero, and we've got two documents to show what it was. One was those charts of accounts, and two, where you made that bank deposit. That's a very simple bookkeeping system, but it works. You really don't need fancy computers to do it, especially if you've just got a few invoices. But when you get a whole bunch of invoices, it takes a lot of work to make that happen. So a salute to your bookkeepers. And as you hire bookkeepers, make sure you give them the time and the space they need to get the work done. Very important that you do that. In bookkeeping, handling the money, handling the deposits, it all comes down to what are you doing to make sure that your security is good within your business. And there's several things that we can do as business owners and managers looking at this to really beef up the security and give you more confidence. A few things that I've learned through the years I'm happy to share with you is the person that is writing the checks generally in a large business doesn't need to be the person that actually signs the checks. So you might have your bookkeeper look at your bills and take the time to write out the checks and balance your checks book and such as that. But giving that bookkeeper, especially in a new business, and maybe someone you haven't worked with for a long time or don't know well, the authorization to sign checks may be not a good thing to do. Now, I don't want you to think that I'm thinking people are dishonest. However, I can tell you that we as owners of the business need to do all we can to keep people as honest as possible, okay? One of the best ways you can do it is you let someone else do all the paperwork and bookkeeping, and when a bill needs to be paid, to go ahead and write it out, and then when it's time for you to come in and pay your bills, you review the checks, review the bills, sign off on them, and have your bookkeeper mail on. Some bookkeepers will put the invoice on the desk, have that new check right on top of it already written out so you can look at both of them. That's a pretty good way to do it if you have time to do it. Lots of times maybe you're not available to do that and other people are in your business. Sometimes you'll have to let the bookkeeper go ahead and sign the check once and then have someone you trust that's knowledgeable put a second signature on the check. So that's the two checks requirement. Then some businesses will say, on these smaller checks, I'm not that worried about them. Maybe two signatures will be all right, maybe not. But on large checks, either me or my vice president needs to sign it. You can set that limit where you want to be, whether it's $100 or $100,000. But sometimes you can change up the rules on those very large checks that could sink your business if someone was trying to embezzle from you. When you're getting in checks as the business day goes forward, or you're out collecting money from time to time, it is a really good idea to have a stamp. I'm holding a check stamp right here. So when you, pretty much the very minute that you take in a check, you turn it over on its back side and you stamp that check where it says deposit only. And if a check has deposit only written on the back of it, then someone cannot cash that check at a bank. They cannot. So if you're worried about security, maybe someone coming in and holding you up or putting a gun in your face or robbing you while you're on the way to the bank, if the checks have deposit only on them, you're safe. They're not negotiable to anyone except for you and your account. So always keep that in mind. It's a really good way to make it happen. A good security method in a business is that you, the owner of the business, open the mail as it comes in. You open the mail. Don't give that to your secretary or just anyone else. Open mail for you and stack it up because you don't have time to do it. That actual opening of the mail can give you insight as to someone that's writing bad checks, someone that's not paying bills that you thought should have been paid because you'll be seeing past due notices come in. Opening your mail is so important, and especially the bank statements that come in. Open those bank statements, look through the checks that have been written, make sure that you recognize the signatures and the amounts, and if you have a question about it, make sure you get a good solid answer to that. Do the same thing with your credit card statements. I am amazed that during the last year, fraud on credit card statements has almost 100 times did it. We have a number of credit cards that we use in our business here, and every single month there's a fraudulent charge on it from someone. Your social media companies are really, really awful about allowing other people to charge your accounts. So you need to keep a running total of how your Facebook boosting is going or your pay-for-clicks otherwise, because there's a lot of fraud going on there and people will be charging your account for advertising that you didn't authorize. Your bookkeeper can bring to you through QuickBooks all types of charts. So each month you can be getting a chart on how your sales are going compared to last month or last year. You can see what your ratios are running, profit and loss. So once you get into your system and you and your bookkeeper can learn how to make QuickBooks give you these charts, it'll give them to you automatically when you print out your monthly totals at the end of each month. And they can be extraordinarily helpful in helping you forecast and plan what you're going to be doing in the future. Charts give you instant information instead of you having to figure up all the individual numbers there. I like the charts. Payroll. Word to the wise. If you're running payroll and you got employees, don't put your bookkeeper or your payroll clerk, being the same, in a position where they're having to argue with the employees about this and that. You set up your standards, what the rules are, what the hours are, how much you're going to be paid or benefits or such as that, and that is in writing. You take the time to make sure the bookkeeper has it just right and the employee knows it just right as you get started. If the employee has a gripe or a bitch about something, they need to come to see you. They need to come see you. They don't need to be arguing with your bookkeeper. That's the conversation that you have with the employee first, and then you take it up with the bookkeeper and iron out anything. Never, ever put your bookkeeper in a position to be at odds with your employees, or something's going to happen. You'll lose a good bookkeeper, or maybe you'll lose a good employee. I'm not saying anybody's right or wrong here, but it's your responsibility to know what's happening. It's your responsibility to care enough to take the time to help your employees avoid stressful situations related to their pay. You need to care, and you need to show them that you do. Also, that's protecting your bookkeeper, and they will appreciate it immensely. Okay, that's the spiel on bookkeeping. Now we're going to talk about some other things. Every day in business, every day in life, we are making decisions that we make the decision now on what we hope is going to happen. We make our decisions now on what our judgment and our experiences tell us should happen. Well, that's called forecasting. And forecasting is a lot like playing chess. You make a chess move here, but you're really trying to plan on what the next 3 or 4 chess moves are going to be in advance. And that's what we have to do in business as well. The better we are at forecasting, the better we would be at playing chess or checkers. But mainly, the better we're going to be at keeping our business alive. So forecasting we use every day. I've checked the forecast twice today because I am so tired of rainy weekends and looking forward to a sunny weekend so I can go down to White Lake at my camper. But 6 weeks in a row now, and they talk about next weekend being the same, here comes the rain. So forecasting affects us weather-wise all the time. And it's cruise season. Several of you have been on cruises recently, and I'm proud of you. Norman and I didn't make it up on a cruise, but if I was, I'd be really checking that weather forecast, because one time, a number of years ago, this time of year, I was on a cruise that actually ended up in a mini hurricane down in the Bahamas, and nobody saw that one coming, but forecasting are really important ever since. If you're in the animal business, growing herds or pets or cows and sheep and other things, you need to know what the season is so you can put your mamas and your daddies together so the babies will be born when it's springtime and warm weather and lots of green grass for everybody to nibble on. So forecasting is involved in every kind of business as we go along. My son works for U.S. Fish and Wildlife, and his job is fighting wildfires in the southeastern United States. So part of his job, and right on his telephone all the time, he can tell where lightning strikes are happening and what the humidity is, because they know that if it's really dry and there's a little bit of breeze and lightning strikes, there's a good chance that a forest fire gets started. So they'll send people down into a remote area before the fire ever gets started and puts it out. So that's a good thing that forecasting can do for them as it can for so many other folks. But what can it do for us as business people? Well, if we're not forecasting, we're going to end up with a sign like this in front of our business, going out of business. And I don't want that to happen. It is not necessary that happens, because good, solid, structured forecasting can help you avoid ever seeing this sign. And it's something that so many new people in business have just never had a chance to think about. Well, we're going to jump into it tonight. What are different things that would affect you where forecasting will be important to you? Well, we'll say the word turns. T-U-R-N-S, turns. And this is being short for turnovers. So if you're selling merchandise, if you're in the products business, you want to turn over your inventory as rapidly as you can. Because here's a little secret. No matter how large your inventory is, you're not going to make any money until it turns. The turnovers is what generates the margins and the profits. So we have to know about our turns. We don't want too large an inventory that is not turning, because that's going to tie up our cash flow. It'll tie up our money, so maybe we can't pay our bills if we have too large inventory. But you don't want too small an inventory. Why? Why don't you want too small an inventory? You don't want too small an inventory because it's hard to sell out of an empty basket. If you've got customers coming in wanting this and that, and you're always telling them, I'm sorry, I don't have that, they'll quit coming. You may be as good a guy as it comes along and have the best intentions, but you have to have what people want when they need it. So turns is important. So forecasting your stocking level, if you're selling products, is super important. Super important, okay? Forecasting your staffing issues. How many people do you need on board to serve what the customers are coming after? Or how time-wise, staffing issues, if it's related to other employees, is important, but it might be forecasting how much time you're going to need to give to your new business or your new side hustle to take care of business, and plan to do that. Training. Are you ready with your staff? Are you ready to handle the new business that's coming your way? Can you sell what's going on? Do you have some selling techniques? Do you understand that? Do you know how to negotiate? See, staffing issues have to have, if you don't have staff like I don't, is my issues, my personal skills and such as that, and what do I need to enhance to do a better job? We have to think about that, and the thinking process in advance is forecasting. Thinking about it while you got a chance to make changes and improvements will help you be more profitable as time goes along. This is getting right back and tying it together with that endurance, staying in the game, learning how to forecast and learning how to negotiate. You have to stay in it a while before you see what's coming your way. Cash flow projections are the most important forecasting we'll do, because different things will affect our cash flow. Of course, the number of sales, the number of turns we have going on is one thing, but the season may affect it. Maybe it's cold weather and you're just eating up a lot of cash just paying a heating bill. Or maybe it's just prior to the summer season and you've got to buy $5,000 worth of inventory to get ready for the summer season. So where's that money going to come from? Where are your predictions to make that happen? That's forecasting to see what's at it. And as you learn to do that, you'll learn what you have to do for each season. Forecasting risk. Everything in the world that has to do with making money has a risk attached. There's a chance we take. And I want to tell you that there's no way that you as a brand new entrepreneur can know what all the risks are if you haven't been there, except through forecasting and learning and maybe attending webinars like this, because people will tell you and help you know in advance that you don't have to guess at it or wait till that truck hits you at 100 miles an hour when you didn't even see it coming. Pretty much anything in every business has already been categorized, and you can find out what the risks are. Whatever the business is that we're going into, we can generally go to an independent insurance agency that insures small businesses and says, let's look at what my risks are, risk management issues are with this type of business. Well, that's what insurance companies do. They are in the risk management business, and they have printouts on different things you need to be aware of. Take advantage of that. That will help you do some good planning and give you ideas on ways to save those unexpected expenses. It will also help you pay smaller insurance premiums. As you're getting into business, you're going to be able to get insurance. The insurance agencies will give you a pretty good rate to get you on board. But here's what they don't tell you. In a few months, in about 6 months, they're going to have an appraiser come by or an inspector to come by and see how well you're handling the risk management issues in your business. And if they'll have a sheet that they'll go over with you and you can see it. And indeed, if you fail to address the risk in your business, your insurance premium will go up first year. If, however, you really are paying attention to the risk issues in your business, there's a chance it will not go up or maybe even come down. So understanding risk management has everything to do with how much your insurance premium is going to be in your business. So just keep that in mind. I don't know. You don't know. You hadn't been there. How can we find out some of these things about what I should be extra careful for? Find someone with gray hair that's been in the business that you're in and talk to them. People, if you ask them in a nice way, that you're just trying to learn from their experience, what are some things I need to be extra careful about? They'll tell you. And you may indeed get a treasure trove of knowledge that saves you a lot of money and time and effort just by asking someone. Now, when I was coming along after my father died, and I had to find out a lot by myself, I didn't know about the insurance agents, but I found out early on when I started talking to them. So as you talk to people, they give you good tips. That's how I find out about this, and indeed may be able to help you figure out what the risks are that you need to guard against that you haven't thought about. So don't be ashamed to ask. There's no way that you can be expected to know everything if you haven't been on the journey. Marketing and the strategies that we use will have a lot to do with how fast we can move forward and get active into the market. We got to be careful not to move too fast, but we also got to be careful not to do anything, because these are tools that we have to do. I was so impressed with Darcy, and hey, Darcy, I see you're with us tonight. I see that once Darcy has got into the game, she's going wide open. And so my word of caution would be, make sure that if you're spending money and you're paying for clicks or you're boosting ads or things like that, be real careful, because you can go through more cash and you realize in a hurry if you're paying for a lot for advertising that you haven't been paying for. So we want to advertise in such a way to get a return on that investment. That's where the look and hook advertising series comes in real handy, to figure out a way to bring that return on your investment back. So what is the primary goal for forecasting? It is to have the right product at the right style and size and be able to sell it for the highest possible price, after we purchased it at the lowest possible price, because that's where we get our margin. The difference between buying below fair market value and selling above fair market value, that's the amount of margin that you'll be able to do. And at all the time, keep a good risk management tool in place so that when the market cools down, we're not left over with a bunch of inventory that we can't get rid of. Very, very important. Example. Already last year, the folks at Walmart, I'll use them as an example, ordered in Christmas lights. And it won't be long, they're already in one of the nearby warehouses. And the very minute that Halloween is over, the Christmases will flood these big stores, right? And they will have these lights on sale. And they know right now with the prices that they've got on, a few days right after Christmas, they're going to slash those prices down to 75% off. They know right now that they're still going to make money selling those lights at 75% off. How? Because they bought right, and they're going to sell them right, and they price right. So the key to having a successful sales program is having your forecasting wide open, in good standing, and understanding what's going on. Now, part of the forecasting message is going to roll right on into now negotiating skills. And what I've really enjoyed teaching folks in these classes is something that most folks just don't know. And that is that you can forecast how a negotiation will go. You can very much forecast how a negotiation will go if you've been in business for a while, and the longer you've been in business, the better you'll get at it. Because planning is so important. Knowing how to plan, to forecast your negotiation. What's going to give you the edge is called total preparation. And if you own total preparation, then you're going to determine what your goals are, your pricing, your terms, and the concessions up front before you ever start the negotiation. You will determine your goals and write them down. Your pricing, your terms, and your concessions, you'll think about them, write them down, and prepare to make them so that when you into the negotiation, you will have a plan. It's just not I'll plan to go and see how it goes and do the best I can. That's what everybody else does. But 10% of all the people doing a negotiation win the negotiations, only 10%. 90% just kind of come out of them. But that 10% that does really well, they know that they are able to do it because they are prepared, well prepared. Now, what is a negotiation? It is every deal you're getting ready to have for the rest of your business life. We negotiate all the time. Every day, if you're working with customers or clients, you're negotiating. And so the better you get at being prepared, okay, we don't go for it. So we need to prepare and think about our introductions. Remember, I've been encouraging you to do introduction videos because they are so important. It sets the stage for you being knowledgeable and indeed respected. Where you sit, how you position yourself in a negotiation is very important. You want to sit beside someone. You don't want to be face to face. You want to be in a position where they're comfortable and you are as well, where you're sitting. The documents that you're bringing, the quotations or the proposals or the contracts need to be a work of art. They need to be well done, typed, professionally looking good, spelling corrected, and such as that. The blanks there are just a place to fill in the blanks. You've done all the possible work you can to make this negotiation go well and to make it go your way. What are the questions that people are going to ask you? You're thinking, you're forecasting now. I'm going to forecast what questions my negotiating partners are going to be asking me, and I want to have a good answer for every one of those. Anticipate the different questions people ask you and have a list of frequently asked questions ready to go. This will come in really handy for you lots of times all through the years when you're training people or when you're doing brochures and things like that. You know that in a buying and selling situation, you've got a certain amount of money that you can spend. And you want to think about and forecast in advance what your high dollar will be and what your low dollar will be. And know what the distance is. And the wider you can space this distance gives you the more room to make different counter offers in the middle. But think about it. What is your high dollar and your low dollar so that when you are ready to make an offer or a counter, you don't give it all away on the first time you talk, but you lead folks to get to where you want to get to. Really, really important to do that in advance. But you've also got some secret weapons. All of you do. Tisha and Darcy, Zerwanke, all of you have some secret weapons. And your secret weapons are the value-added features that you can bring to a negotiation. What are you bringing to the negotiation that someone else can't? What can I bring to a webinar or a seminar that someone that has never owned their own business can bring? Experience, life, heard a lot of stories, know how to package a proposition so that the customer knows they're getting a good deal and paying the least amount down they can, or getting a good deal at a very good interest rate, or maybe paying a deposit that they can stand, or maybe just some upfront money to get into the deal. The little things that bring value added to the deal go a long way. It may be that I will deliver this product for you for a bare bones price. Or yes, I'll be open on Saturday mornings if you want to come by and pick it up on Saturday. Or yeah, if you'll buy our product, I'll help you promote it in your business. Things that you can do may be indeed what closes the deal for you, but doesn't really cost you any more money, but your competition is not offering it, and therefore your proposition is really cool because you forecasted that you want this negotiation to go your way. And most of the time, it's not all about dollars and cents. It's the little things that you will learn that make the difference in whether or not you close the deal or not. That's exactly right. So what secret weapons can you bring to the table to make your deal look a whole lot better. But I'll tell you this, and if you're planning on it and you're forecasting it, the main secret weapon that's going to help you close deals is knowing that you want to capture the moment. Knowing that when it's time to stop selling and start closing, that you have the ability to close the deal. Capture the moment with a little bit of drama, with a little suspense. Being a pro, being a professional salesperson is the difference in getting the deal and not. But these things have to be practiced and thought about and planned in advance, and indeed you'll get better and better at it every time you do it. Now, next week I'm going to give you some really good secrets on how to approach this, but it can be so powerful for you. So, eye movement, silences, body language, the volume of your voice has everything to do sometimes when you're able to actually close the deal. All right, now we're going to negotiate. We forecasted it, but part of that forecasting and negotiations is to have what they call a BATNA, a best alternative to a negotiated agreement. That is a plan B. Before you go out and buy something expensive or important or a lot of something, know what a good deal should cost you and where you can go get it. And if you know that you can get this thing you're looking for at a certain place at a good price, that is where you start negotiating. Not that particular place, but you go out in the world and see if you can beat that deal. See if you can improve your position, and then you're going to start making money by negotiating at a lower price. You'll start making money by negotiating at a lower price, by having that best deal, your goal, but knowing where you can go to get a good deal now. The way that most inexperienced negotiators get in trouble is that they're too quick to say, no, I can't do it. That's kind of where I get this, it's not a good idea to say take it or leave it, because that's just an invitation to say no. But in negotiating, you want to have the skills to keep talking to the customer who makes you an offer. You can come back and say, well, can't take that, but, or yes, I can do this if. Yes, if, no, but. Say that with me. Yes, if, no, but. That's a style of negotiating that teaches you to keep the conversation going until you find common ground. Now, I wrote a little book on this. It's at Amazon, and sometimes people buy them $3 or $4 a piece. Just a pamphlet, but it's all about negotiating, and it will help you. Very simple process to do. As long as you've got the customer talking, you've got a chance to close the deal. And the way that you keep them talking is that when they make you an offer, if you can't take it, you counter in such a way to keep the conversation going. And I call that yes, if, and no, but negotiating. I've sent you handouts on this, and I'll send you one more that go into it in depth to teach this. But it's all about keep talking with the customer until you find that common ground and common deal. Now, there's 4 fundamentals in negotiating, 4 building blocks that you want to always keep in your mind. Number 1, never give up anything unless you get something in return. Negotiating is a balancing act. A balancing act. You want to remember that this person you're negotiating with is not your enemy. No, both of you are there to find a good situation, a win-win deal, right? So the people you're negotiating with, consider them your negotiating partners. But you don't want to give them something unless you get something in return, because you're here to make a living as well. That's number 1. Number 2, try to get them to make the first real offer. And there again, that's where just saying take it or leave it doesn't work really well, because when you're doing your advertised price tag, you want to raise it up enough that you know you've got some negotiating room. You want to know that when they see that offer that you've got up there, they will probably offer a lot less just because your customers are good negotiators. So when you're doing that advertised sale price, you put your price up there high enough that when they make you an offer, you've got some wiggle room as well. then you can come back and make your first counter offer. You will have already planned your range, and you will already plan how many counter offers you can plan to make before you can close the deal. Number 3, always, if you're buying, the first things that you'll want to say is, now, is this your really best price? Come on now, is this your best price? Now, when I'm working with Sampson County farmers, I call that their poor mouthing tactic, and they do it really well. They just knock you off the block right to begin with and say, hey, I see that advertised price, and I know you got plenty of room, so just go ahead and give me your best price right now. So that is a good tactic, because lots of times the person you're buying from will drop the price way down. So if you're on the other side of that and someone says, all right, what is your best price? Then you want to say to them, well, I think my price is quite fair that I've got listed there, but I'd be interested in knowing what is your best offer you can write me a check for right now. So that's the way that you can get someone to make the first offer to you that's real. And you make sure that they know that you come with your trading pants on. In other words, you've got the authority to do business, and you want to ask them, can we close the deal here? Or you don't have to go home and ask someone else about it and come back. Ask that question that's fair, okay? Number 4, what we just talked about before. Do not close the process. Don't you be the one that tells the customer to go somewhere else and buy something unless you've determined that you don't want their business. And the good news is, as a small business person, you don't have to take every deal. You may find someone that you detest, or you just don't think that they will be a good customer for you, or you just don't want to have anything to do with them. Well, you be nice, but that doesn't mean that you want to keep the conversation going. But if there is a chance, if you do want this business, if you do want this person for a regular customer, keep talking, keep hope, and try to close the deal. And you do that with yes, if, and no, but negotiating. There are a lot of different tactics employed. As a matter of fact, there's 21 of them, which I've given to you in your handouts that were important. But we're going to look at the 9 topics that are most used in today's business world. And one that you might see more often, and not because it's being played out more, especially in real estate offers or in high expensive items. And I call it the burst your bubble tactic. And that is when I'll give you an example. I had a piece of property on the real estate market, and my agent called me and said, Steve, I got a call from another agent who said, we're really interested in Steve's property, but I don't think my client can make an offer anywhere close to what he's asking for him. Are we just wasting our time to send in a lower offer? Well, the agent called me and asked me. I said, heck no, you tell them to send the offers in. Always say, yes, please send an offer in. A negotiation cannot start until someone makes an offer, no matter how low or how high. And no one knows, you don't know, I don't know the circumstances that led up to someone putting a price tag on something. They may be able to sell it for a third of what they're asking for it. They maybe don't want to get the big dollar, but have rather get a trade-in or some type of concession. Indeed, what it seems to be a low-ball offer from the other client may be exactly where I want to be. So welcome the offers and then start negotiating. Don't let the burst your bubble stop you from saying, oh yes, please send offers in, I'll consider it. Flinching. Flinching is the old Fred Sanford, used to be on TV, Sanford and Son, the junkyard man. Someone make him an offer for something, he says, oh my God, here comes the big one, oh my gracious. Just acting like it's just killing him because someone made him an offer that was so much lower than what he thought it ought to be. That's called flinching. Now, you don't need to carry it to the extreme that Fred Sanford did, but just making a physical sign, put your hands up. The ladies are real good at putting their hands up by their temples like it gave them a headache. Just make a sign like, oh, man, but don't say anything. Make a physical sign like, man, this is not good, or point towards the door and just kind of shake your head and look at them. Do not say anything, because the words that come out of the other person's mouth may be, well, I didn't mean to hurt you. Maybe I can do a little bit better on the deal. Any tactic that you can use that'll get the price to come down and not cost you any money is a good time spent. You're making money by doing that. So flinching is a good tactic. In the same light, silence. Just when someone makes that offer instead of a big flinch, just look at them like they're crazy as H. Would you make me an offer that high or that low? Just look at them like, wow. Or look off like that, or shake your head, and just look down. Again, don't say anything, because silence is powerful here. If you're dealing with someone that really wants to sell something or really wants to buy something, they will get excited about the fact that you are seen to be withdrawing from the negotiation because you're not saying anything. And that will improve your position to the point that they may indeed make you a better offer without you giving up anything. Remember that first rule we said? Keep everything in balance. Don't give up anything unless you get something in return. Well, if you're on the other side, you do want to gain and not have to give up anything, because that improves the balance for you. Pending price increases. In this age of inflation, using the pending price increase is a good way to get an order from someone, and I use that every day in my sales. I'll say, go ahead and make a deposit today, and that'll give you a price increase protection. Or if you go ahead and buy it now, you won't have to worry about price increase between now and summertime. And all indicators are that prices are still going up a little bit. So that'll help improve your position with closing your deal. The red herring is a tactic that is used in negotiation when one party focuses on certain items that they're selling that are good items, while they don't mention or hide things that are bad. It's talking all about the good things and not talking about the bad things. For example, let's say you're looking at a used pickup truck, and the salesman is leaning up against the back of it, pointing out the nice paint job or the new tires or the new upholstery or the new engine work. Tells you all about the good things, but he's leaning up against the hood where there's a dent right there or a scratch. So he's covering up the scratch and showing you everything else. That's an example of a red herring. On the other side of the fence, when you're buying items like that, you have your radar up and on, you're being shrewd, you're being mindful. So if you sense there's a red herring going on, you will be more involved with your radar to see what's going on. Or always, if you're not a pro at what you're buying, bring someone with you that is to help you with that. Retreating to higher authority is a good tactic. That's when you're working with someone, getting ready to buy, and you work them right down to what you think is their best deal, and then you say to them, well, I appreciate you working with me. Now, is this your very best offer? And they say yes or no. They don't say yeah. And you say, well, I don't need to take this and go talk to my wife or talk to my husband or talk to my daddy, talk to my partner. I got to go talk to a higher authority before I can make this decision. Well, when that happens to you, I don't guarantee you that when they do come back, it'll be coming back with an offer that is less than what you wanted it to be. So how do you protect yourself from someone using this tactic on you? Right in the opening with a serious negotiation, you ask someone, are we going to be able to close this deal now? I mean, I've got my numbers together and I can close the deal right now, but are you ready to do the deal? And they usually will either tell you yes or no. Yes, yeah, let's finalize this, or no, I don't have to come back. Well, if you get that no, I don't have to come back, that means you need to leave yourself one more counter offer, because when they come back, it's almost always with a counter offer that is lower than where you are now. So be prepared for that. Splitting the difference is when the two parties decide that they want to do the deal. Let's see if we can meet in the middle and split the difference. When someone says, let's split the difference, generally that is a closing sign, and you need to move forward thinking pretty much you're probably going to get the deal, and be real smart about how you do the splits. Sometimes a professional salesman will split the difference 3 or 4 times and improve his position each time. Someday I'll show you how to do that. Bringing the cash or bringing the checkbook with you is a good way to move someone into let's closing the deal. If you're buying, you've got them right down to the bottom line, as far down as they're going to go, and then you pull your checkbook out and you write a check for less money. Write a check for what you are willing to go ahead and hand them for it, knowing that is a really good deal, and say, now here's a check. Do I give it to you, or do I go down the street and give it to the next person? That will move people. If the money's in their face and you're ready to spend the money, then they will come to their very best deal. Just keep that in mind. You can do the same thing with cash. They'll peel them right off, right down to that figure. Make it a lot lower than what their last offer was, or at least where you think they can go, and be ready to do the deal if you can. Now, there's no backing up from that. When you use that ploy, it means you're in it to win it if you can. Nibbling is a process where one side or the other keeps asking for a little bit here and a little bit there. I want this, I want that, I want this, but I want you to do it at the same price. A lot of people do that, especially with cars or with house deals. Free oil changes, free yard maintenance, free paint job here, free this, free that, free that. On the other side, the way you fight that is when you close a deal and you iron it down. Remember I said, make your documents a work of art. When you get to that point with a customer where you're agreeing on what the deal is, you write it down, write the number down, draw a circle around it and initial it, and just hand them the pencil, just say initial right here. And then when the nibbling starts, you're able to say, well, yes, I can do that if you'll ante up a little bit more money. Everything they ask for is going to cost a little bit more money, and it's going to be added on that figure that y'all agreed was going to be the first selling price. A lot more study in the study guide. There's a lot more tactics and ploys that you'll want to read and to use and enjoy. And when I give a webinar or a seminar on negotiating and forecasting, we go deep into this, actually buying houses, buying cars, buying property, negotiating different things. One of the main mistakes in negotiating that young folks will make is that they don't recognize that when someone is ready to buy, and they just keep right on selling, keep right on talking, and they just talk themselves right out of a deal. So be looking out for buying signals, because when the buying signals start coming in, you need to stop selling and start closing. So a buying signal is when someone starts assuming ownership, talking in ways as if they own the product, or when are you going to deliver it? Or let's talk about this detail. I want to finish this deal up, but how about this detail? Or acting like they're disappointed because you can't get it to them fast enough. Those are buying signals. And when you get that, you start wrapping it up. You start closing. You get your paperwork all cleaned up. You collect your signatures. You close the deal. I'll show you how to close the deal next week. Congratulate them on their bargaining skills. You want this person that's just done business with you, whatever it is, Darcy, big deals, little deals, you want that person to know that, man, you really enjoyed doing business with them. You learn from their negotiating. So doing this type of negotiation and talking about the terms, it helps you build a relationship with the customer that makes them want to come back and do business with you because they enjoyed the process. It is a fun process to work through some numbers and details about this much will cost you this and this will cost you that, and finding common ground. But you want to congratulate them on what a good business person they are. Always do that, because that makes them feel good about coming back to see you and doing business with you. And after the deal is done, you get your paperwork, you hush, you get out of there as soon as you can, or get the customer on out of here, because there is such a thing as buyer's remorse. There is a thing that people will talk to somebody else that talk them out of a deal, or they have second thoughts. So close your deal, do it clean, and separate. It's the right thing to do. Now, from a personal note, I can tell you all these things that is good and bad about negotiating. But I don't tell you now, what I want to say the best to last, and that is be the kind of negotiator with people that you're selling to and that you're buying from that makes them respect you and look forward to doing business with you again. the folks that you're going to be buying your materials from are going to be very important to you. We once had a customer named Mr. Honeycutt who bought all of his tractors from us. We were Alice Chalmers dealers then. And he was a really nice man, and he talked softly. He always did what he said, and he was the best negotiator I ever talked to. And the key to a good negotiator is wherever they go, people look forward to doing business with them. They will get the very best deals. They always tell the truth, and they always come through with what they say they're going to do. And when times get tough, if you're depending on vendors to sell you things, if you've been a regular customer, maybe you didn't try to beat them down on every price, but you let them make some money. As long as you were making money, that was a good deal. You were looking after each other. Because there will be a time when you need the vendor to help you. You might need some credit. You might need a special favor. And the same thing applies to them. Build relationships with your negotiation. Build relationships and make it work for the long term. Remember that. We need people to sell to us that are friends, just like we need people to buy from us that are friends. So it's time for you guys to be players. Be players. Get in the game. Get active if you're ready to. Jump in there and go for it. Get out of the stands. I mean, magic march is here. Isn't that right? I want to tell you that no one else out here in the world except me and our associates and entrepreneurs in the academy here are going to be promoting you. That's why we are so important to each other. And you have to promote yourself. You have to say to people, I am a great place to do business. We are a good business. You need to tell them that. Have a good logo, a good image, so that folks can see you're proud of yourself, and they're going to be proud to do business with you. Have signs at your website, different places on your quotes. So let them know. And this is an example that I use on a lot of my propaganda is talk with a dealer. This is a great place to do business. Listen, you have to do it. It's up to you to promote yourself, not someone else. If you're a veteran, if you're a woman's own business, you're a Native American business, Native, whatever the key is, anything that you can use to bring commonality or common denominators with your customers, put it out there and let them see it to remind them that you're promoting yourself and you want them to do business with you. You are a great place to do business. Now, let's talk about the odds. A lot of folks would say, hey, I'm a small business person. I'm a woman-owned business. I'm 77 years old. I mean, the odds are against us, right? The odds are against us. Well, let me tell you a little story about Mr. Longfellow. Mr. Longfellow is a little Dachshund dog, a little wiener dog. You've seen him before. And the little fellow got hit by a car, and he lost one of his legs. He had a three-legged Dachshund. But his family loved him so good. He was from down around Charleston, South Carolina. And down in that way, they have an event every year. The Dachshund Association has a dog race every year where all the dogs come and run. This was in 2007. His family took Mr. Longfellow to the race. There were 178 other Dachshunds in the race, 178 dogs in this race. And there was only one that had three legs, and that was Mr. Longfellow. And guess who won the race? You talk about being against the odds. Mr. Longfellow won the race. I want to tell you, whether you got one leg or two legs or three legs or four legs, whatever it is, don't give up. Find the resilience, our tonight's words, to bounce back and keep plugging in there, and let's figure out how to stay in this race. In entrepreneurship, it's not whether you win the race or not, it's finishing, getting to the finish line, staying in the race. And I know that, yes, you can. And after 5 weeks of working with you and one more to go, I am so excited about the work that y'all are doing and the possibilities, and hope you will keep it on, and we can make this happen. So thanks for staying with me tonight. God bless you all, and I hope you have a great week. Send in some homework, send in some tests, do those mission statements, do your videos if you want to. if you want your business to go forward, that's what will make it happen. And Win will be hanging in there with you. So any questions or anything you want me to send you, put it in the chat board, or you're welcome to turn your microphones on, and we'll chat a little bit. I'll answer any questions that we can. Thank you so much. Anybody want to talk to me?
I just want to thank you.
Mr. Carver, just wanted to say thank you so much for tonight. I certainly appreciate you and all the amazing information. I learned a lot of new things. Thank you, everyone, for coming tonight as well. I appreciate it. Don't forget to complete those surveys for us. We absolutely love it. And just a few of you who are out of state, I just ask that anyone out of state that you don't share it with anyone else, because technically our webinars are for in-state only. That's what our funds are for. So just don't share it out. We do love you coming. Please continue to come back. We love you being here, but just don't share any of the links with other outside of state people. Just wanted to kind of remind everyone not to share.
We're something special down here in North Carolina. That's right.
No. But every state has their own set of funds for things like this. And I just want to let those people know, please just don't share it out to others, because we don't get credit for it. That's
right.
Thank everyone for coming.
All right.
Don't forget those surveys.
Anyway, Darcy, let me ask you if you're still on board and close by you. Mike, how's your week going? I'll take a chance that you're still there at the microphone. Darcy. Okay, rolled the dice and lost it. We'll hear from her next week, I'm sure. All right, everyone, God bless you and your family. Take care, and we'll see you next week. Send your homework and your quizzes on back in, and we'll get to working on your certificates. Y'all take care. Good night.